Hey everybody, what's going on? It is Wednesday, May 5th. Dow Jones makes a new all-time high. I don't know, it was a couple of months ago. I think when Dow was getting over 30,000, I said we are going to see Dow 36,000. Why is that number 36,000, or why was that number 36,000? Because that was a book that was written back in 1999 at the height of the dot-com bubble, proclaiming the title was Dow 36,000. And you know, that was like, back then, I mean, people talked about it. I talked about it back then as the classic headline indicator, right? I mean, that's like the classic contrarian thing when it comes out. And the Dow, I think, in 1999, 2000 was at about 11,000, but the book came out calling for Dow 36,000. And the difference between back then and now is that back then you had Clinton running budget surpluses, and now I'm sure all of you, or at least most of you, know, if you've been watching my channel, that a budget surplus is a net drain on the financial balances of the non-government, of us, of the economy. I mean, again, if I use the swimming pool analogy, when the government runs a surplus, it is draining the water out of the pool. The level of water is going down. The financial balances are going down. So it's exactly the opposite of what we're seeing now when, you know, they're really filling up the pool. So it was correct in 1999 when that book came out. First of all, calling for Dow 36,000, you know, like a 300% increase in the Dow at that time after it had already gone up a lot. That was a pretty bold prediction, but calling for it at a time when the federal government was running budget surpluses, no, that's not going to happen. Now, you know, I've been saying, hey, we're finally going to see Dow 36,000 and beyond that, because now the fiscal pump is running in the other direction. So it's, you know, now we have a positive environment with respect to economic support, you know, support to the economy, support to income, support to savings. All that stuff factors in. It factors into corporate profits. I mean, you know, I said yesterday, we are seeing a record number of companies beat their earnings. And that should not be a surprise to anybody, because when you have an historic level of fiscal support, you're going to see a historic level of profits. So, I mean, it's pretty simple to understand. And as I've said all along, you know, in spite of everyone saying it's a bubble and it's overvalued and this and that, the only thing you really have to focus on, the only thing we really have to worry about is, again, a reversal of these policies where you start to see a drain from that swimming pool. In other words, the government's starting to, you know, suck that income and those savings away. That's not happening. So I'm not worried. So basically you buy every dip in the market. You look for high quality stocks. You buy them when people get scared and frightened and they sell them off. You know, we're seeing another opportunity in the NASDAQ right now where these stocks, you know, I mean, we saw this in February. We're seeing it a little bit again now. I mean, the NASDAQ's going to make a new record high too. So that's it for that. Hey, did you ever play the game of Monopoly? It's a fun game. I mean, most people, if you're my age anyway, you grew up as a kid playing that game a lot. So Monopoly, you have a board, you have properties. You know, you roll the dice, you go around the board, you land on properties, you try to buy them, you try to buy a whole set of these properties, and you try to dominate the board. The interesting thing about Monopoly, which relates to, you know, things that MMT explains, is that you cannot play the game until the board distributes the money first. Like, somebody has to distribute the money first. So, like, when you roll the dice, and if you go around the board and let's say you land on community chest or chance and you pick up a card and the card says pay tax $75, what's happening is that you are giving back some of the money that was already distributed by the game. Okay? That's not money that you created, that you give the game. That's money that was distributed by the game. And the same analogy applies to, the current system that we're in, where the government taxes you, but you pay back funds that were already spent into the economy by the government. And it can only be that way because you can only pay your taxes with US dollars, and US dollars can only come from the government. Just like monopoly money can only come from the monopoly game. You can only pay that $75 tax when you land on chance or community chest with the monopoly money that was already distributed by the game. Now, I know a lot of people are going to get angry at me. They're going to get mad because they're saying, well, I pay my tax and I'm not getting anything. Look, it's in the aggregate. All right. And again, I don't want to get into a political discussion. If I was running things, it would be different. Okay. We would have a more equal, fair distribution of government money as it is spent out. I mean, over the last few months, again, I said yesterday, we're seeing that personal savings go back up to $6 trillion. How did it get there? It didn't get there because we didn't go to restaurants and movie theaters. It got there because the government spent that into the economy. I wish we all had an equal share. Believe me, I'm on your side when it comes to this. Unfortunately, all that stuff is wrapped up in politics, who gets what, but I'm talking about the swimming pool as a whole got filled up with that $6 trillion or $3 trillion additional from where we were. So the monopoly game is the same thing. You cannot play the game, all right, unless the board distributes money. And by the way, if you have a monopoly game, and if you have the instructions, the rules, which comes with the game, you will see that it says right in the rules, if you run out of money, the game's money, just write it up on a piece of paper. Write up new denominations of cash on a piece of paper. So that's literally, you're printing money. Monopoly tells you that. And it allows you to play the game. That's the thing. The unit of account, the currency, allows commerce to happen, allows the economy. I've said it so many times, there's no correlation, and I'm gonna say it explicitly like this. There is no correlation between money printing and inflation as long as the system is working properly. Now, you can't come to me with the Zimbabwe and the Weimar analogies because those are completely inapplicable analogies. And if you come to me now saying, well, Mike, look at what's going on with lumber, look at what's going on with copper, look at what's going on with soybeans, we've had a supply shock, which at the same time we've had this massive fiscal support. So yeah, it's understandable, but things are gonna moderate. So again, there's no correlation. I mean, I've posted up charts so many times, like on my blog and my website, that show inflation and the monetary base, or inflation and the so-called, public debt, the national debt, which is really all the money ever printed after taxes were taken away. That's the outstanding balance of all the dollars ever printed after taxes were removed. So literally, it's like 28 trillion of tax credits. That's how you have to think of it. It's not a debt. It's 28 trillion of uncollected taxes. They may never be collected. So we hold them. We own them. We own that 28 trillion. And again, it's not equally distributed. So that's it. Anyway, I talk more about this in my podcast. I have it now. It is now up on my site. The link is in the description below. So check out my podcast. And if you're not already a subscriber to this channel, please do so. Like and subscribe. Thank you very much, everybody. See you tomorrow. Bye.